Hello, and welcome to the Wade Borth Podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome back to the Wade Borth Podcast. Again, joining us today is Nicole Tate. We're going to be going over Nelson Nash's book, Becoming Your Own Banker, The Infinite Banking Concept. Today, we're going to be talking about the cost of acquisition on page 68. This is to me, it's a fabulous chapter, and so I'm looking forward to this discussion today. This one is, I get a lot of clients when I'm talking to them that I don't know that they truly understand what Nelson was getting at. And it took me, quite frankly, a long time to really understand. And maybe it wasn't so much that I didn't understand as I didn't pay attention. I think that's probably my biggest thing. And the more I've read this and the more I've done book studies around Nelson's book, and again, rereading it from a different perspective each time I read it, it changes my thought process. Give me your insight or give me your thoughts about this chapter.
There's so much here. It takes time to capitalize the policy, and there's a lot of, but I'm putting this, it's taking me so much time to get all of that money back into the policy. And I would agree with, I didn't fully understand it when I read it, and maybe it wasn't that I didn't fully understand it.
100% agree. It's a short chapter. It's not even a full page. And we'll cut it short by talking about it for 20 or 30 minutes. There is a lot of good information.
Right.
Again, and the purpose of the podcast is just to get you to think and really maybe address the same questions that the listener might have, and maybe think of it a little bit differently, even if you read it a couple of times. I hadn't thought of it that way. So hopefully we can open your thought process and open how you think about this chapter, because it's really interesting is that once you start applying Nelson's principles to your life and to what you do, that's when you really start to see how this applies.
And Wade, I think no matter what people do, this cost of acquisition, I mean, you can think about anything that you buy. Even if you don't really think there's a cost of acquisition, it's hidden in all, but it's all convoluted because unless you don't see all of the application fees and the financing fees and cost of acquisition.
Yeah, I mean, that's jumping ahead into this chapter, but let's talk about that a little bit. I've had some friends buy houses, right? And that have had their policies, and they've come to me and said, should I use my policy to buy my house? Should I use traditional financing? And this is when rates were super, super low. And my thought, and again, it's just my belief, and I know Nelson would probably punch me in the face if you heard me say this, is that financing my house is going to be the last thing I want to do with my policies. But he also said that early on in the chapter, or early on in the book, right? He says in the chapter, The Problem, he talks about people want to hop to the biggest of outflow of interest, and that's typically their mortgage or their house. But he says that's the recipe for disaster, because you're setting yourself up for failure because it's such a big jump. Maybe he wouldn't punch me in the mouth, but he would caution me.
I don't think he would punch you in the mouth.
He'd have to jump up, but it's just one of those things that, in my mind, it's like the last thing I have other things I want to do first. And then the house acquisition is, from a numbers standpoint, doesn't make a lot of sense. But here's what I've really learned in the last 3 or 4 years, especially with rates being so low. People, they think, I'm supposed to finance everything I do through my policy. That's not necessarily the case. I mean, in a perfect world, yes. Again, you have to realize it took Nelson 13 years to get out of bondage from the banks. So the point is, from a number standpoint, it might make sense to maybe not do it right away, or that would be the last thing you do. But here's what I find rather interesting, and this is what I've really started to learn, is that think about the time and the pain that you have to go through in order to buy or to acquire a mortgage, especially anything that's not cookie cutter, that's maybe just a little outside the box. Maybe you can speak to that a little bit, Nicole, in your situation. And then what the cost is, I'll finish my thought and I'll let you go with this. The cost isn't always dollars, but it's time. And then what's your time worth? And that's really what Nelson gets to in this chapter, is the cost of acquisition isn't just dollars, it's time and opportunity. Go.
Yeah. And what you mentioned, this house that my husband and I are building is going to be a non-traditional house. And I literally do not want to have to produce all of the documentation. I'm also self-employed, so that makes it even more challenging, right? Because then you have to provide a lot more information. There's not just W-2s that you just pass on and they look at that. So it is extremely overwhelming to think about the amount of time and effort that will be required to put this together to say, will you approve, please, pretty please, will you approve this so that I can pay you? There is a cost. There's a financial cost, but it is absolutely a cost of time too, whatsoever.
So there's a couple things. Let's unpack that real quick. Control. Think about, and again, I go back to, we had an opportunity to buy a rental property, and by controlling the financing, our cost of acquisition was really small, it was fast, and we got a smoking deal because we're able to move super quick in the market. If you had to go through a traditional process, we wouldn't have been able to close on it because he wanted to close in 5 days. Have you ever closed a mortgage in 5 days? I mean, without you having to bust your back to satisfy a bunch of underwriters that don't really care about you. And so when people talk about, oh, I don't have my money back right away, it's like anything else. This is a business you're starting. And if you think short term, that's where you get caught. It's like, oh, I don't have all my money to use right away. And what business do you? Show me a business where you have 100% equity right away. That's truly a business that's going to make a huge impact in your life. It's not going to happen. So the point there is that you're starting a business, but once the business is up and running, then you can take advantage of these deals, right? So you can buy a piece of real estate without having to go through the pain. And again, let's talk real quick about the time. And here's what I think people don't understand. I was listening to John Maxwell. I don't know if you listen to John Maxwell or not, Nicole, but if the listeners know who John Maxwell is.
John's books.
Yeah, but he made a point. He was talking about people's time in meetings. He says, when you put a meeting together, you have to look around the room and say, what does everybody bill out? And this is where I do a really good job of saying, what is my time worth? And they bill out on a 15-minute increment. So do the same thing when you're in a meeting. He says, well, I'm going to have an hour meeting and I'm going to have 5 people here and they're all making $50 an hour. What value are we getting that's $2,500 worth of value out of this meeting? Because that's really what it's called. Do the same thing in your own life, right? If you're going to put all your financing paperwork together, you have to give that last pint of blood that the mortgage company wants in order to approve your loan. And then they're going to come back and do it again. And the time, when you start putting, if your time is worth $100 an hour or $50 an hour or whatever it is, put a time value on that and say, what's that really worth? And are you ever going to get that back? The answer is no. You're never going to get that back. So stop looking at, again, this is what everybody wants to do. They want to focus on the wrong thing. They're looking at the wrong thing. They're evaluating the wrong thing. So yeah, you put money in. Do you have 100% availability right away? No. Do you get that back later in life? Yeah, you do. But do you get back the time and the dollar value of that time when you do a home mortgage or when you buy a piece of rental property or you invest, you buy another business, whatever it is? If you don't have to pay for the financing cost, the cost of financing, which is your time and your money, because everybody just looks at the money and ignores the time and what that true cost is. If you could change that from being a 6-week process to a 6-hour process, how much money have you saved?
You put it in terms of how much money you have saved, and we may be getting away just a little bit from some of the stuff that he writes in there, but it's super interesting to me to think about. Time is the one, if you say what is more important, having more money or having more time? Most people would say having more time.
Right.
Because you can always make more money out there, but you can't make more time. And so after you've spent 6 hours putting all these documents together, that 6 hours is gone.
Correct. And if, again, put a monetary value to that time, that money's gone as well. Because you could have been out doing whatever you do to earn your $50, $7,500, $200 an hour, whatever it is. That's gone. That opportunity's gone. And I think you said we're getting away from that. I think we're hitting the nail right on the head. He talks about the idea of 7 people, right? The hammer cost $17, but by the time you put people's expense and the expense of time, it's over $100 to purchase this hammer. That's exactly what we're talking about. It's the hidden cost. It's the unseen cost that people just completely miss because they're always so focused on, again, we've been conditioned to think and focus on the wrong thing. And that's really where I think it comes into play, where people have to understand that it's not just the dollar that's outlaid, it's also the time that we're saving. So again, going back to this piece of rental property that we bought, we closed it within 5 days, and we could have done it quicker because we controlled the financing. He goes on to talk about Coca and Daimler Chrysler. And he made the point, he says, free money isn't finance money isn't free.
I thought he did a really good job of that. So not just with the Chrysler, but the first paragraph where he addresses that, he talks about organizations that are supported by contributions. So I'm thinking nonprofits.
Right.
I mean, maybe some people just send them money, but they have employed people who go out to raise money, and those people who are employed to go out to raise money have to be paid, or they do it on their own time, which means they're not making money someplace else. So there's absolutely a cost of acquisition to all of that money.
Yeah, exactly. Because if somebody is not getting paid, the whole point is they're making a donation in kind. It's still a monetary donation, but it's not dollars, it's in time. Well, that time is worth value. So the nonprofit tracks that. It's really interesting is when nonprofits have people volunteer to work for them, they keep track of that because the government requires it to keep track of it to see what kind of impact they make. And so they put a value on that time. The whole point is that we have to put value on our time as well when we start looking at acquisition. Because again, people are focused. The first year, 2 years, 3, 4, 5, 6 years, they might say, I can do better if I just do it with cash. And I'll say, absolutely, you can be better with cash. But is this a short-term process or is this a long-term process? This, to me, is a lifelong process. It's hopefully a generational process. So myself, my son, and then once we get to the point where we understand this, then having the cost of acquisition of that policy being early, okay, that's fine. We'll give that up. But when you say can do better, make sure you compare and bring in all the factors, right? It's easy to make a comparison when you don't consider all the factors, which is your time and how much agony you have to go through in order to get a more, even if it's non-traditional, just anything just a little outside the box. They're going to have you jump through hoops, and you're going to, even if you're a non-drinker, you're going to be drinking by the end of that process.
Well, even just to buy a car, it's an hour in the office with the, you have to give them all of your information. There's a little bit of pain with any of that kind of financing that you do.
Okay, so here's a great example of the cost of acquisition. My son just recently got his driver's license. So we looked and to find a vehicle nowadays that isn't a piece of junk for a reasonable price is almost impossible. So first off, the cost of acquisition. How much time did I spend looking for a vehicle? And then when I put my time at my rate, that vehicle became very expensive real fast. But so when I hired somebody and I told the sales guy, here's what I want, go do your job, I'd gladly pay him a little bit more on a vehicle instead of having me go and do all the looking. Does that make sense? Because his rate's still less than my rate, which is, again, from a business person, why do you want to be doing, like in your world or anybody else's world, if I make $100 per hour and then I have to do filing that I can hire somebody else at $25 per hour, why do I want to do that? That's a whole other discussion, but that's still a cost of acquisition of all things. Is find out what your value is and then be in your specific, what you do the best and what makes you the most money, and hire everybody else that can do it for less than what you're doing. But that was a discussion I had with my wife is let's find a sales guy, and even if the price is a little bit higher on his lot or where he finds it, it's still probably not going to compare to how much time I have to spend in order to make that happen. That was the first thing. So anyhow, we go and he finds us a vehicle, and actually we had two choices. It was really nice, but they're very similar. Found a vehicle, and it wasn't, again, he's a 15-year-old driver, just gets a new license, so it's not like it's a huge price. And we go into the car dealership, and I said, yeah, that's the one I want. And I'm thinking I write a check, and they transfer the title, and away we go. I've done private transactions where it takes a half hour maybe to get to know the guy, see what he's got, look at the vehicle, and purchase it. And I've bought vehicles less than 10 minutes. Yep, I like it. Write a check, and away you go. Get the title, and away you go. But so we go into the car dealership, and he says, hey, okay, you're going to do this? He says, have a seat. And he says, our finance people will be in with a little bit. He says, you got a couple hours. I go, a couple hours? I said, I'm going to write a check for this thing. I don't have 2 hours to sit and wait with you. And he says, they're going to be a bit, and it's going to take some time. And I said, if you can't do it in less than 15 to 20 minutes, I'm leaving. I said, you're going to drop the price by $1,000 if it's going to take me 2 hours. And he said, what? I said, in today's age, I said, I'm writing a check. I said, I'm financing it myself. I said, I have private financing for this thing. I don't need to do financing through you. And he was really taken aback because he didn't quite get that. I said, my time is way more valuable than your time. I mean, I didn't mean that to be derogatory, but I'm just like, why do I need to sit there for 2 hours to have a finance guy who's sitting up there having coffee, doing nothing, have me wait for a half hour, 45, and come down and do the punch on the keyboard and then have me Why does that take 2 hours? And he goes, okay, I'll see what I can do. Then the guy come right over and he says, oh, you're in a hurry. I said, no, I'm not in a hurry. I said, I just want you to understand that this process should not take 2 hours. And I'm not going to wait here 2 hours. You either do it now or I'm leaving. He goes, okay. And so he did it. It literally took him 15 minutes. I'm like, this is the true cost of acquisition. Would have been, my wife was there, my son was there. And I said, all add up. I said, we'd have $1,000 stuck into time to just to have them do the financing. And they weren't doing the financing. They were just transferring the paperwork. So anyhow, long story is this is a true example of when you have the authority to do your own financing, you can cut your cost of acquisition down by a ton. But nobody sees or recognizes that because they're conditioned to think, well, that's what it's going to take. And they don't put a value on their time.
Wade, you could have sat there
What's
for
that?
an hour and 45 minutes and scrolled through social media and done nothing, but just get your mind filled.
Yeah, I could have. Right.
Yeah.
I could have done that, but it just wasn't, it's not my wheelhouse to do those type of things. And I think the car dealerships do that for a reason, is that they get you invested in time. Same with the mortgage companies. I think they do a lot of the stuff they do so you get so invested in time that no matter how mad you are, you look back and say, I got so much invested in this, I'm not leaving. I'm not going to change what I'm doing. No matter how pissed off I
also
am.
think that status quo. This is the way we've always done it, and this is the way we're always going to do.
Yeah, exactly. That's just a great example of the cost of acquisition. And the cost wasn't dollars, it was time. But what's more valuable is time, because time can generate more money than what the dollars cost. And that's why I think people get short-sighted, to your point, because when people come into this whole idea behind becoming your own bank, you take control of the banking function in your life, that's the first thing they go to is, oh, there's friction here. I'm not getting 100% right away that I can use. No, not today. But I said, it's going to save you a tremendous amount of time and value in the future, as well as today. There's some immediate benefits, but they're very short-sighted. And quite frankly, if people are that short-sighted, I'll just say, well, this probably isn't for you. You do have to have a long-term objective. And you have to be able to think and want to change your paradigm a little bit. I think that's probably the biggest thing, too, is like people that don't want to change their paradigm and they want to take what they think they know today and apply it to here, probably isn't going to be a good fit, because you have to be a little bit malleable in that thought process. So the cost of acquisition is something that you really have to understand, and that is, there's a lot there to think about in the sense of what is it really costing me to acquire a business? Because again, with my family, we called the Borth Family Bank, and that was a business we started 15 years ago. The cost of acquisition has been absorbed and applied to our business now. This thing's humming. This thing is going along really well, as long as we treat it properly, treat it like it should be treated, and have it be a profit center no matter who we're lending money to. That's the big key, is we have to treat it as an honest banker. So, because again, if you think about going back to the chapter, he was talking about Chrysler with Iacocca, and he says you have to gather your highest paid executives, accountants, lawyers, all to set up camp in a high rent district in the Beltway in Washington in order to receive this free money. He was talking about the money they got from the U.S., from the government. And again, that was kind of a real eye-opener to him as well. They didn't give him all the money right up front. They made him go back and beg for this money on a regular basis. And so he had to get all these people, and they had to keep going back, and to the point where he had to have a whole staff sitting in Washington in order to get these dollars. That free money was very expensive. And this was a very expensive lesson for Iacocca in financing.
And this goes back to, he who has the gold makes the rules. The person that has the money pulls the strings and gets to tell you, you're going to do this, you're going to do that, or I'm not going to own you or provide you with my money.
With the free money, right? Yeah. That's a great point. I'd never really put that together, is that this is a great example of the golden rule. Those that have the golden rule. That's exactly right. And those are the people that this is the government making the rules. And Iacocca had to follow this and put all these expenses there. And to his point, he says that it typically for every dollar that you get of quote unquote free money, it'll cost you anywhere between 15 and 85%. 15 and 85 cents for every dollar that you look at. Some of the big charitable organizations, the Red Cross, and this was years ago, but I remember cost of acquisition for every dollar you donated to go to benefit.
The fact of the matter is, maybe they could be more efficient, but they have to go out in campaigns and find ways to motivate people to give them money.
Yep. And then when you're in the business world and business setting, I mean, you understand that whatever you do is going to cost you. Whatever is going to either take time or resources. It's just a cost, and you just have to say worth doing what we're doing. If we apply all the cost to it, right? Where people get lost is, for example, I talked to a guy, he's a real estate investor, and he's like, oh, I use cash. I'm like, hey, that's great. And then, so he was evaluating his rentals based on no interest cost. So in his mind, he was saying, I have no acquisition cost to finance this business. I said, yeah, boy, here's where you're wrong. There is a cost. What if you could have been receiving 7 or 8% on that money somewhere else, and now you use it for your business? Shouldn't your business be paying it back at least at the 8% you could have been earning somewhere else? Again, this is the cost of acquisition people miss all the time because they pay cash. When you apply that, then his investment deal didn't look nearly as good. It still was good, don't get me wrong. It still was profitable. But when he applied that 8% interest cost, which is truly a cost because he could have been earning it somewhere else, he was like, oh, it's not nearly as good. And so it was almost like he almost wanted to ignore it, but he knew he couldn't. He wanted to ignore it because he wanted to be boastful about the fact that he did this great deal, it was a very good deal. It just wasn't quite as good as what he thought it was. And so I said, if you ignore your costs, if you ignore your utility payments, if you ignore your mortgage, then all these real estate deals are fabulous. So why are you pick and choosing which ones you're ignoring? You should include all your costs. Yep. And to get him to get over that hump, that was a real eye opener for him. But I think for the majority of the people, that's really, again, when I set up our banking system, our family banking system, we buy a piece of real estate, we pay it back with principal and interest, and then you evaluate it with those parameters applied. And then you can make a better judgment if it's a good deal, should sell it, should keep it, you need to raise rent, whatever it might be in order to do that, versus just ignoring one of the primary costs of acquiring that piece of property. So I think that got down a bit of a different rabbit hole, but there's a huge benefit to understanding that you have to apply all your expenses, and interest is being one of them. Interest is going to Wells Fargo, or the interest bank, it's still an interest cost that needs to be charged and needs to be accounted for.
And Wade, I think there's just lots of good points in here. And we've talked about how people just sometimes don't see this as a long-term process. As you begin to put these things in place and you realize this is a long-term banking function, it has never been intended to be a 2, 3, 4, 5 year sort of thing. It isn't a get rich quick scheme. That's why I think sometimes people think that it's a scam, because they're like, how could you possibly do this and get rich at it? They're missing the point that this is financing. It's a banking policy. It's a financing policy.
Financing goes on forever.
Yep.
I mean, point in the book about that too. He says financing is going to go on forever. You either choose to take control of it or you have it control you. And then to your point, go back to page 3 of the book, and it's in the 4th paragraph, right on the top of the right-hand side. He says, it's not about any kind of investment. It's not about getting rich quick. Quite contrary, it's the opposite of that. It's getting rich and understand. If you can take control of that function in your life over the long term, that's really what the benefit is. And it's not always about rate of return. This is the kind of the goofy part. Everybody's like, oh, let's see what the rate of return is. In this cost of acquisition chapter on page 68, at probably the very last sentence, it says, and this is where I think people really miss it. He says, you are in competition with others who must go through the same erosion that has been outlined. Think about that. You're in a business deal, and you can get access to financing at your whim whenever you want and whatever terms you want, and you're the one that controls that versus somebody else that has to go get a thumbs up or thumbs down from Wells Fargo. Who's going to win, or who should win that transaction? The person that controls the banking function, right? Again, this goes back to, I've said this in the past podcast, I had a CPA tell me this. He says, whoever controls the financing always wins.
I just wrote that down. That's something you and I have talked about a lot, and I just wrote that down, and it's true. And so again, we're talking in June of 2022, so the housing market has been hot for a while, and there's lots of complaining out there, at least around here, about these people that come in with cash and they buy these houses. They get the upper hand because they have cash. They don't have to worry about, is there approval for anything? No, they just plop the cash down and it's done.
Yeah. I have my nephew's he does mortgage acquisition, and he makes a point. He says, get pre-approved, get you ready to go, because, and this was last year when you were buying houses, if you didn't have the money and you didn't have a letter saying that you could pay for this thing the day that you look at the house, like within hours, you weren't going to get houses, right? You weren't going to get a mortgage, or you weren't going to get that house that you wanted, because everybody else was coming in either with cash, which is a form of financing. It's not really cash. It's privatized financing, or they had a letter that their mortgage says, yeah, this guy's approved for this house and he can move forward with it. But again, those that have access to that availability saying, I can do this right away. So don't get mad at the guy that's coming in with private financing and with cash. Say, how can I do that? This is where I think plays jealousy with curiosity, or curiosity with jealousy. We should these guys getting their money versus being able to steal this house away from me or steal this property away from me. Especially in the investment world, it moves fast. And if you have to wait for somebody else to give you a thumbs up or thumbs down, who's truly in control of your business? If you can't move forward unless you get the bank to say yes or no, who's truly in control of your business? The banks. And that's why that statement, whoever controls the financing always wins. So the question is, do you want to control your financing, or do you want somebody else to control your financing? Because there's a cost of acquiring dollars. There's a cost of acquiring money. There's a cost in time and dollars when you have to traditional process that people are doing this. And this is why we get a lot of real estate. That's their number one issue, is availability of money when they want it. They're not afraid to apply the banking function to their life. They understand that part of it. It's just, get my money, and can I make a deal? Let's make that approval.
Yeah. I can end my comments on this chapter with a little story that kind of has nothing to do with this, but it's funny. My husband and I were in the Miami area many years ago, and had to stop and get gas. We were on our way back to the airport. And so we just stopped at this gas station, and there were bars on the windows. We don't have any gas stations with bars on the windows around here. And so I was like, oh, there's bars on the windows. So he got out to pump the gas and picked up the pump. It didn't work. And the guy came over the intercom and said, you have to pay first. Nothing's free. And I was like, oh, that was at a time when we didn't have to pay first up here. So that was years ago. And his comment, nothing's free here, nothing is free, period. Yeah. There's a cost.
100% agree. That's like, again, going back to what we just started when we started our conversation. Nothing is free. You're starting a business. There's nothing free about that. There's going to be a cost to getting that thing started. But the long-term benefit is huge when you can control the banking function in your life. Nothing is free.
Yep.
I'm going to leave it with that. Nothing is free. So.
Very good.
Cool. Appreciate that. There's a lot more to that chapter, but we'll leave that for a later discussion. So if you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches, and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.